Welcome to your ultimate pit stop, Piston Pundit, where horsepower meets headlines. While the world fixated on Canada's sudden retreat from a digital tax standoff with Washington, a geopolitical earthquake rumbled quietly out of British Columbia. On June 30th, Canada shipped its first-ever LNG export to Asia, cutting out the US and rewriting the global energy map. After $40 billion and over a decade of hurdles, LNG Canada isn't just online, it's on the offensive. So what does this mean for trade, power, and pipelines? Buckle up. Canada cuts the cord, breaking free from US energy reliance. For decades, Canada's natural gas flowed almost exclusively to the US, 8.8 billion cubic feet per day in 2024 alone, generating $8 billion. But this pipeline dependency also meant vulnerability to Washington's policy shocks and trade threats, especially under Trump's tariff-heavy playbook. The recent digital tax spat is a case in point. Enter LNG Canada, a $40 billion powerhouse co-led by Shell and Asian giants Petronas, PetroChina, Mitsubishi, and Kogas. On June 30th, 2025, its first cargo set sail aboard the gas log Glasgow, bound for South Korea. That voyage wasn't just a delivery, it was a declaration of independence. By shipping directly across the Pacific, Canada bypasses volatile choke points like the Panama Canal, slashing delivery time from 20 days to 10. This makes Canadian LNG not only faster but more stable and highly attractive to Asian buyers. Add in the price edge, Montney shale gas trades cheaper than US Henry Hub, and the result is both geopolitical leverage and economic gain. Canada is no longer just a continental supplier. It's stepping into the global LNG spotlight, just as Asia accelerates its clean energy transition. But building this kind of energy independence didn't happen overnight. It's the result of a decade-long effort grounded in partnerships and persistence. Kitimat's LNG triumph, a blueprint decade in the making. The Kitimat LNG terminal didn't just materialize, it was forged through over a decade of engineering, negotiations, and billions in investment. Official construction began in 2018 after Shell and 4 Asian partners greenlit the project. Fueling the terminal is the 670-kilometer Coastal GasLink pipeline, channeling natural gas from BC's Montney region. Train 1 launched operations on June 22, 2025, with a 6.5 million-ton capacity. Train 2 is on track for late 2025, pushing total output to 14 MTPA, making Canada the world's 8th largest LNG exporter by 2026. But the real torque behind the project? The Haisla Nation. As co-builders, not bystanders, they secured over $500 million in contracts, including low-emission tug services, setting a global example for Indigenous-led development. At peak, 9,000 workers filled the site, and $5.8 billion flowed to BC businesses and First Nations partners. This isn't just an energy hub, it's economic reconciliation in action. Projects like Woodfibre LNG and Cedar LNG are already following Kitimat's tire tracks, forming a West Coast LNG corridor powered by collaboration, clean energy, and community-driven growth. Before we delve deeper, do us a favor and smash that like and subscribe button. This helps us reach more auto and energy enthusiasts just like you. Now let's shift gears and steer toward our next point. Asia's energy pivot and Canada's perfect timing. Asia is racing to reduce its reliance on coal and Russian gas, and Canada's LNG debut couldn't be better timed. While the US leans on allies to buy its LNG under Trump's tariff-driven policy, Canada arrives as a clean, stable, and politically neutral option. The gas log Glasgow, carrying LNG from Kitimat, is en route to Incheon, South Korea, home base for Kogas, a founding partner in LNG Canada. More tankers are queued, including the Puteri Sejinjang and Diamond Gas Metropolis. By 2026, Kitimat expects 170-plus shipments annually, about 1 every 2 days. Why the demand? Proximity matters. Canada slashes transit times and avoids choke points like the Suez and Panama Canals. Emissions matter too. Montney gas has a lower carbon footprint, and shorter shipping reduces environmental impact. And then there's price. Canadian LNG trades at nearly half the US Henry Hub rate. Add in political predictability, and Canada checks every box for energy-hungry Asian nations. As demand from Asia rises, Canada is already planning its next big leap, scaling up production for the global stage. Phase 2 in the pipeline, doubling down on Canada's LNG ambitions. LNG Canada's first shipment had barely left Kitimat before talks of expansion surfaced. Phase 2 could double output from 14 to 28 MTPA, potentially placing Canada among the world's top 5 LNG exporters. A final investment decision is expected by mid-2026. This isn't speculative ambition, it's market-driven. Shell aims to add 12 MTPA globally by 2030, and Kitimat is central to that strategy. The site's infrastructure is already expansion-ready, making the addition of 2 more trains a scalable, not structural upgrade. Challenges remain. Coastal builds cost more than US Gulf Coast counterparts. BC's Clean BC regulations raise compliance costs, and investors remain cautious, especially after a now-denied rumor of Petronas withdrawing. Still, commitment from Shell and its partners remains strong. CEO Chris Cooper stressed Phase 2 depends on Phase 1's performance. Stable shipping, supply chain reliability, and demand alignment will determine its future. If approved, Phase 2 could deliver sustained jobs, deeper Indigenous partnerships, and long-term economic returns, solidifying Canada's status as a reliable LNG powerhouse in an unpredictable global market. And this shift isn't just about economics, it's transforming Canada's position on the global diplomatic map. Canada's LNG, from export to diplomatic power tool. LNG Canada gives Ottawa something it's long lacked: global leverage. For years, Canada was energy-rich but geopolitically limited, locked into US pipelines by default. Now, LNG exports to Asia rewrite that script. In a world of energy weaponization and supply chain shocks, independence equals influence. As Prime Minister Mark Carney put it, Canada has what the world needs. Delivering LNG to allies not only boosts Canada's relevance, it reduces strategic vulnerability. Japan faces US pressure to back Alaska's LNG, but Tokyo is hedging, drawn to Canada's cleaner fuel, faster shipping, and political neutrality. That gives Ottawa a new bargaining chip in trade, defense, and multilateral talks. Canada's Indigenous-led model also sets it apart. The Haisla Nation's deep role in LNG Canada offers a blueprint for ESG leadership, an asset in today's values-driven investment climate. As new projects like cedar, wood fiber, and siliciums rise, Ottawa's role in global energy expands. So what does this all mean in the grand scheme? Verdict: Canada's LNG launch rewrites the global playbook. Canada's debut LNG shipment isn't just cargo, it's a declaration. With Kitimat online, Ottawa steps out of the US's energy shadow and into the global spotlight. This launch signals a bold shift: Indigenous-driven partnerships, billion-dollar infrastructure, and direct pipelines to Asia's front door. If Phase 2 advances, and projects like cedar and wood fiber follow suit, Canada could soon go wheel-to-wheel with the world's top LNG exporters. It's a pivotal moment for both economic independence and diplomatic clout. Now over to you. Is Canada truly ready to lead the next energy chapter? Will it maintain independence, or get pulled back into US influence? And should this LNG model be a blueprint for future global energy deals? Drop your thoughts in the comments. We want to hear your take. If you enjoy the torque between policy and powertrains, hit subscribe and ring the bell for future updates. Thanks for watching Piston Pundit, your ultimate pit stop for all things automotive and global energy. Check out the videos on screen now. There's more horsepower behind every headline.